traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all. Happy Monday. It is a slow day and a slow session already, and I'm hoping that we get some action today. But I'm not gonna put any money on today's action. That's for sure. It's Monday. It's the second week of August. We are smack dab in the middle of the summer doldrums, and we're past non-farm payroll, and we really don't have anything important happening this week. I mean, we do have the RBNZ, on Wednesday, and then we do have retail sales and producer prices at the end of the week. But other than that, I mean, it's slow. I mean, it's slow, and I can't imagine the markets being too terribly active this week, let alone this month. It's probably going to be a pretty challenging month as far as volatility goes. And as much as I was joking with Paul. I'm looking at the pound dollar, saying, all right, well, I'm going to stay short the pound until 125. I mean, frankly, we may go to 125 in the pound. I don't know if it's going to happen this month, and I think these are the type of environments that you really have to just take profits quickly. You can't hold on to a losing trade for a long period of time. You can't, the volatility is a lot less, so you kind of got to take what you can get when you can get it. I will be a little bit more active as far as taking profits off the table and looking for smaller gains here and there. One of the trades that I really want to be in by Wednesday of this week is I really want to be long the Aussie New Zealand. It just it's coming off right now, but you can see here's the hourly and the whoops, that's the Aussie US dollar. Here's the Aussie New Zealand. It's coming off right now. I really like to see the Aussie New Zealand come under a little bit of pressure over the course of the next 24, 48 hours. I want to take advantage of that if we can get it. Like I said, the rest of the market, it's very quiet out there, and you just have to be really careful about holding on to something that's a losing trade. You want to make sure you nip that in the butt real quick as you can, and then taking profits when you can. When you got a decent profit, taking some off the table. Let's start off with the euro dollar, and actually, what I'm going to do is, I think what I'm going to do, since my charts are pretty messy at the moment, well, let's clear off some of this stuff. We're going to clear off the fibs, and let me see if I can get rid of some of these minor lines here. Now, we had obviously a really strong jobs report, which pushed us lower. Here, let's remove. I'm just removing some of the stuff. I can redraw a lot of this, but so here's the euro dollar, and we cleared. I guess I can remove that right now. We had the ABCD, as you all know. AB equals CD, and we had come under pressure. Now we held the 618, so this is an important fib to see. Okay. We held the 618 down here. We bounced, and that bounce, and by the way, just so you all know, I had an order to sell the euro dollar last night at 111.25, and it never got triggered, obviously. But I still think that any move up here is an opportunity to sell the euro. The question is, are we going to get up there? That's the question that it's like, are we going to make it all the way up there today? I mean, if we can rally, and last night we were trading right at 111 when I went to bed last night. Like when I went to bed last night, we were trading right here. It was like right here, yeah, 110.90 something, and I was like, okay, well, I just stuck an order in at 111.25, and I'm like, if we make it to 111.25, I'm going to sell her, and I think that you have to take that approach. You have to wait till it gets up here, if it will get up there, and then take advantage of it. Now, obviously, support will be the spike low from Friday, because people are probably trading against that low. I would imagine. I mean, we had this. Here, let's go back to the 4-hour chart. We had this hammer formation. So people are like, okay, well, that hammer is going to hold, so I'm just going to get long, as long as that low holds. Well, as long as 110, what's the spike low? 45. So as long as 110.45 holds, people are going to probably trade on the long side. Personally, I think it's bearish. Yeah, it was a really strong jobs report. So again, I think the best trade out there, if you're talking about the euro, is waiting for a move to 111.25. I'm willing to sit and wait. I'm not willing to try to get long here or short here when you're in the middle of this range. Okay? I'm just not willing to do it. But if we can get a rally up there, I'd be looking for a short. Question is, are we going to get up there today? Today's, it's Monday morning in August. We have a 26 pip trading range in the euro dollar. I wouldn't be surprised if we don't quite make it down to 110.50 and we don't quite make it up to 111.25 today. That wouldn't surprise me in the least bit, especially when we don't have any data. I mean, we have labor market conditions index in the U.S. Canada's got building permits, but that's it. I mean, there's nothing. The only thing that we've got going for us today really is that equities are at all-time highs. That's it. Because we can see some volatility. We can either see, the equity markets, but S&P plow up another 10 points, or we can see it pull back 10 points, from the highs. Whenever you're at all-time highs, the risk of a pullback is high, and then or the risk of more volatility is there because you're stretching your legs, But for the most part, it is slow. All right, now let's go to the cable. Okay, so here's the pound. I'm short. Actually, I'm about 6 foot tall. I'm not that short, but I'm kind of short. Okay, so anyway, but as far as the cable goes, I'm short the pound. It's just bouncing around. Now, we push below the 618. We're hovering right around the 618 retracement. What that really suggests at this point in time is if we break through this 130.20, you're going to see some selling, because if you take a step back, you go out to daily, you look at this and you go, okay, well, we are holding the 618. We had a possible false breakdown. I'm willing to be on the long side of the cable as long as that holds. I'm not personally. I'm just thinking. I'm trying to think like the rest of the market. We had a hammer. We're bouncing. We're holding the 618. As long as that holds, I'm willing to be on the long side of the cable. That would be the thought process with some traders out there. Now, me personally, I am short, so I would rather add to short positions if we can get it. Now the question is, where in the hell are we going to get it, and where we're going to get a rally to? All right, so 130.20. I have to write that down as support, because I have to 130.20, and I'm going to have to put an asterisk there, because the fact of the matter is, if we break through that, if we can clear that, you have to start looking at the pound going down against everything. I'm still long the euro pound from Friday, and I'm holding on to it. I'm flat. I actually own it right here. Probably shouldn't be in it right now, but I'm not really too worried about it. Anyway, if the pound breaks into new trend lows, then anything that's pound related will probably get hit, I would think. All right. Now, right now we're capped at 131, but you have to imagine that we can break above that. I think that the pound is, because there is a short, a pretty substantial short position in the cable right now. I think a move above 131 could really take us a little higher, maybe back up to here to 131.70. 131.60. Actually, it's 60. Spike higher. It's all still the sell zone that we had on Friday. I want to write down 131 and then 130.70. 31.71. 31. 131.70 in case we start to get a squeeze. But we are still bearish. Okay. The cable's bearish. And people will forget especially when you get squeezed above here. People will forget that they'll forget that just on Thursday the Bank of England cut rates to all-time lows. They still have their stops above here. Doesn't really matter, right? Anybody and everybody stops right there, but it can still squeeze up, higher than that. Just as we're holding these lows, anybody who's short's probably tightening their stops right now, and that's why that we are ripe for a squeeze. Now I hope that doesn't happen. I don't want it to squeeze higher, but it's possible. It is possible. I think what's more possible, frankly, is a move below the 618, or a move below the spike lows here. But we're going to have the dollar playing ball as well. Okay, let's go over to the Swissy. Now, whenever I look at the Swissy, all I can do right now is just shake my head, because we never got down to the 96-cent level that I really wanted to buy the Swissy. We just, obviously, after non-farm payroll, just ripped higher. The question is, how high are we going to go here? And I sure as hell can't chase it, but I'm more upset that it just continues to go up. So the 618, that is holding, and so let's write down that, because anybody who, if you're looking for something to do, and I'm not suggesting this is a good trade, because I think we could actually break higher, but if you're looking for something to do right now, you can short the dollar Swiss. You can. You want to short it and put your stops above 98.30, you can do that. I mean, it's 98.15 right now. I don't know if I'd look for a lot. Like a move back down here would be this if you want to get long, I think this is the better trade, is you just wait for a dip like that. Okay. Which would be 97.50. But resistance is 98.30, and I'll tell you, if we break that, this thing is gone. And it's just, it's upsetting to watch it go higher, and I'm not in it, and I've been wanting to own it so bad, and it's just, I just don't own it. I can get rid of this for right now. But this is that's the 618. Obviously, that's what's holding us up. And like I said, a dip down to 97.50 would be a nice place to be long, in my opinion. Okay. Let's take a look at the dollar yen. So the dollar yen yesterday, on Friday. This dollar yen, we completed a flag pattern for the most part. See that? Flag, completed, reversed. the dollar yen. I mean, this has been this right. Oh, well, actually, I should keep that for a second, shouldn't I? I mean, look at this. Look at it. You know what? Let me redraw that for a second. See this? What I'm thinking here is this. Hold on, because we're obviously not going down there. Hmm. See, this is an hourly chart. We continue to go higher. Relative strength is stopping. It's kind of like that Swissy. It's like, okay, if you want to short it, you can. Now, personally, with stocks going higher, I see why the dollar yen is going higher. I'm surprised it hasn't gone up. It hasn't been a stronger move higher. That's surprising to me. That's going to be some really key resistance right here. I'm going to write down 102.70. If you're long, that's probably going to be a pretty good resistance level. On Friday, we were talking in the chat rooms, and even though I didn't buy it, I'm like, man, this dollar yen looks like just a layup move higher, because you had bonds dumping, and as bonds are dumping, that means yields are rallying. I mean, here's the 10-year, right? So as bonds dump, the dollar yen rallies, yields go up. And that looked like a layup trade on Friday. Now, obviously, Friday we were down at 101.70. Today we're at 102.40. It's not as much of a layup now as it was then. So you see the spikes here. There's a gap that would have to be filled right over here. We gapped up and we just continue to rally. So the overnight lows are going to be support, which will be 101.90. Okay. All right. This has been an bearish trend, but I'm going to go out. I'm going to put it onto a range because of the non-farm payroll, and because what we've done is we did not create a new trend low, and following the non-farm payroll. Obviously, if we would have had a really weak number, I mean, the dollar Canadian would be trading well below 100, but that's just not the case right now. This is going to be a pretty key inflection point, I think. It's going to be a really key inflection point. I think. Mm, we're in between fibs there. Oops. Um, okay. Well, I'll just hang tight with that analysis. If you want to short the dollar yen, you could probably take a near term short at like 102.70. Put it in a tight, 15 pip stop, and if you get stopped out, you get stopped out. But that might not be a bad trade. Okay, where am I? Swiss yen. Here's the Canadian. Let's take a look at the Canadian. So the Canadian, wow. Now the crude is so strong, and the dollar Canadian. Here, let me remove all this stuff. Now you have to remember why the dollar Canadian is so strong. The Canadian jobs report were crap. It was a really, really big miss for Canada. Okay, and the U.S. jobs report were a blowout. So it shouldn't be too surprising that we're holding on to these gains. It's just if you look at crude oil. Here, let's go back over to crude really quick. CLU6. Seeming crude. And crude looks like it can still continue to rally. All right. If it does, it'll pull back the dollar Canadian, but I think the pullbacks are going to be pretty marginal. I wouldn't. I mean, look at this thing. So let's just imagine that the dollar Canadian continues to pull back a little bit. By the time we come down, it'll be about 131.25. I would be a buyer there if we can get it. 131.25. Obviously, resistance is at 132. That's without a doubt. Okay. But I think if crude continues to go up, we should look at the dollar Canadian as being a long down here. Don't forget Friday. We had a strong U.S. jobs report and a weak Canadian jobs report. Let that play into your analysis. Let it pull back a little bit. Let it pull back a little bit, and then if we pull back, get long down here. That makes sense to me. Okay. I'm going to put you on hold for a few minutes. When I come back, we will finish up the analysis with all these majors, and then I'll take some questions, which there aren't too many questions today, which is because it's so freaking slow outside, or out here. I'll be back in a few minutes. I'm going to go grab some more coffee. Alrighty, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's go ahead and get back into our analysis here. And we're going to go to the Kiwi. Now the RBNZ, this is where we're going to see some excitement this week, more than likely. We have the RBNZ happening later this week, where the market's expecting a rate cut. Now we have this head and shoulder pattern in the Kiwi. It's a complex head and shoulder pattern. It's not really super exciting to me. I don't just for the record, and everybody should know here, when you're looking at a head and shoulder pattern, it makes it a little bit more difficult to complete when it's a complex head and shoulder pattern and you're tilted towards the breakdown point. Like it'd be much easier to complete if it was like tilted this direction, like the neckline was tilted that direction. You have less to go. So I'm not particularly happy or excited about what you're seeing here, but I think something to note is that this. Let me grab the end of this line. This resistance will be significant for today, and that comes in at 71.40. And what you can do, always here is if you want to, if you're looking for something to do, you can, short the Kiwi here with stops above 71.50. I mean, you're only risking 25 some odd pips. It's not something I'm going to do just as of right now, but it's again, it's a thought if you want to do it. I think the resistance is going to be 71.45 in the Kiwi. 71.45 will be resistance, and then support is going to be the spike low from Friday. One of the reasons why the Kiwi is holding up fairly well too is because risk appetite is. I know. I think that's just key to understand that stocks are, generally speaking, stronger. I mean, I know they're rolling over a little bit right now, but stocks are stronger. The Kiwi is going to hold up a little better too. 70.85 is support. We're in a range here. Aussie. Aussie dollar is actually holding up fairly well because the Chinese trade balance came out overnight. Still strong risk appetite, so it's keeping the Aussie very well bid. Now, if you go out to the daily, I got asked a lot about the Aussie dollar on Friday, and I'm gonna reiterate here. Let me get rid of this. I think the Aussie is a good short, but I'm not willing to short it until we get here. Okay. So in other words, I'm looking for a move above 77 cents. Okay. I would be willing to short the Aussie up here. Oops, I didn't mean to grab the whole line. I wanted to grab the tip of the line. There we go. I'd be willing to short the Aussie on a rally above those highs. And see, the thing about the Aussie, if we get up there, most people aren't looking at that big of, they're not looking at the bigger picture. Most people are looking at this near term. They're like, okay, high, and then they're going to be completely shocked, in my opinion, when we hit new highs and then reverse. Okay. So a move above 77 cents. So I'm going to write down 77 cents because it's a round number. But any move up there, I'm a seller. I don't know if we're going to get up there, but if we do, I'm all over it. Okay. If we can. Wow, this pound's heavy. Good. All right. Support right now in the Aussie dollar. Well, it has to be those lows, right? Basically 70, 75.95. It's just basically 76. That's key support right now for bulls. Bulls want to feverishly hold that low because if that breaks, because I'm trying to just like imagine in my mind what's going to happen. Goes up here and then comes back down. By the time we get down here, I think, as it grinds higher, by the time we get down here, we're going to break through that 76. That's going to be a test of the 76 cent level. Hold on really quick. I'm trying to think what I'm going to do with this cable. We are not at lows yet. What to do? It's like part of me says I should take some profits here. The other part of me says I'm holding it till it goes to 110. I'm just joking in the cable. I don't think we're going down there. But, part of me wants to take some profits here. The other part of me is just like, yeah, I'll just hang on for a bit. All right. I'm gonna wait. It's trading pretty heavy at the moment. Trying to think what I'm gonna do, guys, with the cable right now. Nothing at the moment, I guess. I should take some profits here, but I'm not going to. Okay. Let's go. I'm sorry. Where was I? Aussie, Kiwi, dollar index. Okay, let's take a look at the Dixie. So the dollar index, we have this inverted head and shoulder pattern. I actually did the analysis on Forex Analytics last night for the dollar index. You can see it right here. You can see the 4-hour inverted head and shoulder pattern. So, and this maximum, well, this is a completion of the inverted head and shoulder pattern. That would take us to about the 618, which comes in at 96.58, and you can see that spike low down here at 96.69. So I'm going to write down 96.60. See if we get up there. That's where I want to take my profits of the cable. Because if the dollar index spikes to here, 96.60, we're at 96.34. If we spike up to here, that means the pound dollar probably traded down towards 130. You know what I'm saying? All right. Support. Support's going to be right here. It's overnight. Well, it's not overnight low, but it's spike low right there. 96.10. Dollar index is range bound. I mean, it's bullish right now, but whoops, wrong way. But it's very much range bound. I mean, if you look at the longer term, we're just in a range. Okay. Let's go over to the peso. Now the peso has come under pressure because stocks were selling off. Now, what's interesting about the peso is we just completed a wedge break. Here, let's get rid of this. Not that. Let's get rid of this. Okay. That, you know, would be a minimum target. We can actually go further than that, though. We can actually go a little further than that. So that 618 held really good. So there's a couple things. This peso. First of all, any move back to 1885 is going to find sellers. Period. 18.85. So any move back here is going to find some sellers. Support. I would think we can get down to 1851. I think that's doable. Okay. We're in a range. Let's go take a look at the Nordic currencies. Here's the US dollar Norwegian krona. Now, one of the reasons why the US dollar Norwegian krona is coming down is obviously the rally in crude. Let's get rid of that. Let's get rid of this. Let's do this. Some mess. $852.50, 840. By the time we get down there, because it's going to be 844. So 8.4400, 852.50 is resistance, and we are in a range. Okay, let's take a look at the Swedish krona. So I did not buy this on Friday. And we are still in between that 838, 874. Oops, 874. And we are in a range. Okay. As you guys know, we're inching our way up towards major resistance, which is at 874. Okay. Well, your bias chart is done, and it's obviously very slow at the moment, but there's your bias chart. It's finished. Let me take some comments.